The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this very exciting December day, December the 19th. Why? Well, there are a couple of things going on, and you can see it because the Dow's up 262, the E-mini's up 36. Oh, it just broke out. It's up 37.50 at 25.75. No one's waiting. Everyone's expecting. We discussed this earlier in the week. What did we discuss? Let me just quickly show you here. The 2-minute is in leg D. The 5-minute, I got it covered. So the 10-minute is in leg D. Very exciting, as we had even intraday. There was a spike towards the 25.72 level, and then a pullback to the 25.62 level. Now we're back at 25.75 all-time intraday high. Not all-time, but intraday high. All right, let's get to the nitty-gritties. So the Fed, what is the Fed going to do? Well, we discussed it earlier. What can the Fed do? It's stated very clearly, this is for months and months. They're going to be data dependent. They'd like to be data independent, but it's really data dependent. Within that context, what we're really looking at here is the Fed still is getting data up until about a week ago, maybe 2 weeks ago, that confirmed their thinking that there had to be a raise in the rate. There's no problem with that. There are two things that are going on now, and both of them are being promulgated by the media. One is, to spite Trump, the Fed has to raise, and they can't give in, and they got to say they're data dependent, and they're going to stay that way until the data changes. Then there's another side of it that says, wait a minute, if Powell had looked at my cash index, Cintas call, they are dealing all the time with uniforms, overalls, rentals. They've gone from 217 to yesterday's low of 165, and that is a whopper of a decline. CASH, A is for Amazon. Amazon, one of the key integral companies that are 21st century, that are just cutting edge right across every single medium, goes from 2050.50 back in September to a low most recently, about exactly a month ago, of 1420. That's one of its biggest declines that it's seen, certainly in points. In percentages, it's had other pretty big pullbacks, but this is a huge one in points. It's kind of stuck here in the lower range, so it's not doing that well. S is for SPY. That's a nice broad index. This is the S&P 500, not as broad as the NYA. If I had to show you that, it would be a lot worse. But the SPY goes from 293 down to 253, 40, 293 to 253, 40 points. Oh, I would say that that's a little bit of a pullback, right? That was 11%, actually more than that. Now what we're looking at is it's trying to establish a low from yesterday that was made. It was not even 253. I think it went low. Yeah, 253.28 went below the 253.53 low. So, and now it's trading at 258.04. No big deal. It's just a nice little green candle so far. I'm going to get into the rest of it in a moment. So that's CAS. What's H? Well, let's face it. There's been almost a depression-like, or let's call it a recession-like move in the HEX, which is the housing sector index, which has just plummeted. But so is Home Depot, going from 215 down to the 160, is that 7? I think 67, was that hit yesterday? 66.93 3 days ago. I would say 215 to 163, That is a whopper of a move down. It's one of its biggest moves it's had in points ever. But in terms of percentages, yeah, it's within the realm of the usual. But my cash index, CASH, is saying, hey, Fed, just be a little careful here. You don't need to do anything extravagant. You don't even have to do the quarter point now. You can do it, but you have to say we're data dependent, and we will wait for further data before we make further decisions. Nothing. You could even say nothing has changed, but there are signs that the data is changing, and we will study it as it comes in. Hey, I mean, that's the facts, right? All right, enough with that. So the S&P right now, Dow's up 278, up 1.17. S&P is up 28, 1.11% at 25.74. Look at the candle. It's just barely taking out yesterday's high. This is pathetic action. I'll talk about the rest of the day in a moment. But at this point, 25.30 better hold over the next week, because if it gets taken out, that monthly chart is going to get horrendous, and December's candle is really going to be ugly. All right, let's go to the QQQ, because QQQ has a number of stocks within it that are not really that good looking at all. Oh, they could bounce, but some of those tech stocks, some of those stocks that were leaders, they are really taking it on the chin, certainly over the last couple of weeks, certainly this last week. Now, that would include Amazon and the FANG stocks, who are all rallying today to varying degrees, I must say. They're not really leading, but they are rallying. So the Q is at 160.27. I said to subscribers, we're actually long. We were long from Monday, then we went back again. We got taken out there, and now we, for a little bit of a gain. Was that a gain? No, that was a loss. And then we got back in, and now we're long. So, but the timing was actually perfect for the entry. Just I didn't want to make it too wide a stop. So 160.22, I'd say to subscribers, until we get to the 161, 162 area, this is just going to be a bounce. And I'm going to talk about the rest of the day in a moment, because it's really important that we are in the discovery stage. Now, in other words, we're in the stage that says, yeah, there are a number of aspects that were very negative. What's changing? What's not changing? What can change if such and such a level is it? What won't? Well, the IWM, the Russell 2000, is up 0.84, big deal. So really struggling, just horrible. Sitting on the 200 period, it's almost like this is treacle. It's just grabbing the 200 period moving average weekly chart on the 200 period moving average and said, hey, you got here, I'm not letting go. So after an over 18% decline, if the IWM is able somehow, a week from Friday, if the IWM is trading at 143 or higher, I think we've made at least an intermediate term decline support that should have a decent bounce before we do later on to do some retesting of the most recent lows. That's my opinion. Here we go. Gold. Gold was up quite sharply earlier on. Now it's up 5. It actually went all the way to the level I was talking about. I said that if gold at any point in the next week is able to get to the 1258, 1263 area, and then hold there and turn the 1258 to 1256 200 period moving average daily moving average into a support level, that's going to mean one thing. But if the dollar, and we go to the dollar now, which is down, it's down 38 cents, keeps them pulling back, but still holds quite well. We'll talk about that. None of the rush.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour. My service, of course, is the opening call. Check it out. We've had some real nice positions over the last couple of days. Let's see if that lasts. You never know. 96.67 on the dollar, down 36 cents. You see how it's arching over? You see this arch formation in the daily? See the arch formation in the weekly, just snuck above it a tad, but it's still arching over. But boy, it is holding so well. Look at the monthly chart. But here's the issue. If you see the way, I'm going to go to our callers in a moment. You see the way we've got a silver right here at 1487, up 17. About to start leg D. Excuse me. But this is not really a great scenario for silver. Silver needs to, I've been saying this for so long, silver needs to start trading in the 1525, 1535 area and hold there for a couple of days. That's when silver starts to really get a bit. I'm not saying it can't do it. I'm just saying that's what I want to see. And I'll talk about other things in a moment. Just briefly, we'll go to crude oil because there's a whole section that I want to do on crude oil and bonds in a moment. But we're up $1.42 in crude oil at 48.01. I'm going to go to our first caller. We've got Scott in Safety Harbor. Scott, how are you?
Just fantastic, Basil. I got stopped out of Ford too many times, so I gave up on Ford temporarily, although I have no doubt that it'll be back to the 950 target, which I was looking at. But more importantly, we have to go back in time now, 3 years ago, 3.5 years ago, when I made over 100 grand on CX.
Yes.
And CX is becoming and has become very, very interesting at this point right now. And I know it has a lot of bad press in the United States, and they came out with a statement a year ago that they want no part of the wall. They won't take any contracts to the wall. But, I mean, that's really is minuscule when it comes to how much concrete they're pouring all over the world every single day. So let's take a look at CX.
So, okay, CX, folks, is CMEX, a Mexican cement company. And I always think of this. If anyone knows, I think it's Greek mythology, Jason and the Magic Fleece. This goes back to when I was a kid. But I always imagine that the concrete, that when the automobiles in the 1880s, 1890s, then 1900s, when the automobile really became quite popular, over the 100 years of the 20th century, the world became Jason and the Magic Fleece. I don't know how magic it is, but all around the world, wherever you go, wherever you fly, you see the paving, you see the cement, or you see asphalt, just paving the world. It's just an incredible thing. And I always think of it as transportation today makes it so easy for us to get anywhere at any time. It's just an incredibly wonderful thing. And at the same time, there is a definite penalty to be paid. So now that said, CX is we tried to trade this the other day because it was making a really nice, from the 4.47 level on the 23rd of November, it ran up to a leg C, and the technicals were really very good. So we had 2 small positions. They got taken out, and actually for 3 days I've been looking at this. I wanted to put it on in my newsletter as a buy again, but this has to do with the infrastructure play that's just going on around the country. Not yet a full bill that's going to be deployable, but I think that CX, you're correct. I think in the shorter term, there has been some base building in the mid-4s, and that is acting quite well. It's at 498 right now. I think it's absolutely in play, but because it failed at the high that was made at $5.38 on the 3rd, I'm suspecting that we're looking at a range, and that range says you can go over 5, but watch out, because there's a good chance that you're going to bump into resistance again, and that this is going to be one of your favorite trading type stocks, because I think it's going to be in a trading range where it pulls back, and then it has another rally. Then it pulls back, has another rally, and at some point, the rallies are going to make higher highs and higher lows, and you just got to keep it in mind that a close below $4.40 suggests, now we're done for a little while. It has to form another base lower down. But at this particular point, I think that it's acting very well in the short term. Do you have a trade on right now?
I put one in today, 50,000 shares. But I agree with you absolutely. It's kind of like when I was putting some weed killer in my yard about a year ago, and the weed, I would lay it out, and then the weeds, every time it would pull the weeds back, but then they would come back even stronger after that pullback. And I think we're going to get right back to that $7, $8 range in CX. And again, people that are listening, I mean, you got, if you've listened to me enough, you know the way I trade. You don't put things in the oven. You trade it minute by minute, or you don't do it.
Scott, I agree with you. I'm only saying that keep it in mind that the weekly chart has had a lot of deterioration. It's going to take quite a little bit of energy to build up enough strength so that the MACD eventually crosses positive. Wow, when that eventually crosses positive, I do think that we're looking at $6.50 to $7, but it's going to take a little while. I think this is just like a starter. Those are the weeds. You're starting to water them, and you're looking to see.
And I usually don't talk about this, so I should have prefaced this. I'm talking about a 2-year play on the CX, not a. This isn't. This isn't a couple of months to get to 7. But on its way there, as usual, I'm going to make plenty of money on that up and then that pull. But see, on those way pullbacks, that's how you got to time it. And I have no doubt that it will get back, pull back into the 425 range, and then snap back, to get up to the 5s, and do the same thing, but slowly get up to that 7 every time with that rubber band effect.
I think you've already nailed exactly the plan. I like it. I think you've got yourself a working stock, and that's what we want to do. Even now, as we're talking, you just jumped to 5.01, up 23 cents. I like it, but I'm just saying that I agree with you. It's going to need time to really build energy for an upside, big spike to the upside. But in the meantime, it's looking very good as a trading stock. in a range. Hey, good luck with this, and thanks for calling and pointing it
Hey,
out.
I already warned my wife. I said 2018, I got to get back to work. 2019, 2018, I took pretty much off, so it's you know, she's not
Well,
gonna,
good
that
luck.
door's going to be closed for a long time on the day.
Looking forward to hearing from you, Scott. Thanks for calling. Good luck and have a great 2019. Thank you for calling. So, folks, with that in mind, let me just do a couple of things here because I wanted to finish here because it's really important that we look at the TLT. The TLT, which is the Lehman 20-year T-bond fund, has just spiraled above both the 9 period, the 14 period, and the 200 period moving average in the daily chart, making the whole area, it's at 120.20, making this whole area of 118, let's call it 118.50 to 117.80. That's going to be the key support level for the TLT. Oh, we've got a break. This is great because I want to talk to you a little bit about the potential at 3 o'clock this afternoon. What we're seeing, are we looking at the Dow now up 300, going to be up 600, as everybody says, fantastic, that the Fed is saying things are so bad that we're not going to raise rates. I'll be right back. Dow's up 300.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everybody. So I'm looking at the TLT. I'm just showing you the weekly chart. You see these, look at this beautiful cup formation, and then it goes to an arch formation, it goes to a cup, and then an arch and cup. So I drew it in here. These sine waves, these ellipses, these overlapping waves. It's just, if you understand patterns and you understand how patterns repeat, you will say, look, this 200-period exponential moving average in the weekly chart of 121.33 would suggest that if the Fed, actually, it doesn't matter what the Fed says, and at this point, I'm not sure it even matters what they do, because it's the very next series of discussions that we have in maybe a month or two. But you can see that this arch, now it's bumping into the 200-period moving average. It's at 120.20 Lehman TLT. And if it starts to break above, let me go through here. Yeah, if over the next 2.5 weeks, if it starts to trade in the 123s, and if it's still in leg B, that's one thing. But if it's gone to C, you see how many times we've gone to a B or a C and failed? Very few times do you go to a D when you're in this kind of rectangular sideways formation. So we've got to look to see what happens, because if you look at the TNX, the 10-year yield, TNX, I've got a bunch of questions that I want to get to. The TNX right now is arching over from a peak G. 32.48. It's gone underneath that up channel that I drew. I can actually get rid of that because now it's just making a hate mess. So I'm just going to get rid of that. Out, damn spot. A little Shakespeare there. Out. All right. So that's what I'm really looking at. So the yield is in leg B to the downside in the TNX. The MACD is negative in the weekly. Stochastic is very negative. I still see some further weakness in the yields. That means the TLT can go a little higher. But we'll have to look to see, is the TLT going to move, because money is flowing out of equities into the security of the bonds. All right, I'm going to go to John in Miami. Hi, John, how are you?
Good, Basil. I just missed your TMX thing, but can you tell me if the 30-year bond looks like it's topping here or wants to go higher? And then I want you to look at a Forex pair for me, please.
All right, give me a second here. TYX, I'm looking at the 30-year. US. This is the US.
The 30-year bond futures?
Yeah, so I'm looking at the US continuous contract. Now, this is going to be really important. It made a peak G in the futures, in the continuous contract, which would be the same as the futures, back in July of 2016. This is a rolling price, the exact chart pattern and the exact highs and lows, the peaks, everything's exactly right, except the price will change. So the price is 116.5 right there, 166.5 right there. And then it pulls back, and now the most recent low that was made was at about 136, just under 136. Now it's trading at 144, and it's just about to bump into the resistance that we're looking at of these highs back from April, and I think it will April, May, June, and around about 144, call it 145. So we're right in that area. If I'm looking at the daily chart, I've got it in a leg F right now. I haven't made it an alternate count. It would be F/C, but I'm going to call it F for now. I could still go to a G. And it is the MACD's very strong, stochastics at 84%. But it's the weekly chart that has spiked very sharply above the 200-period moving average. Based on what I'm looking at right now, we're within a point of getting to very strong resistance, which says two things. One, if there is a close above 145.5, I'd prefer to say a close on a weekly basis above 146, even just one close, that's going to suggest that yields are going to go down further a little longer, and it's going to suggest also that the TLT has got, the bonds themselves have got very strong support in the weekly chart in the mid 140, let's call it the whole 142 area. But if by the end of the day, let's say going into Monday or Tuesday of this week, if the U.S. bonds trading at 144 and 7/30 seconds right now is trading even close to 143 to 142.5, we might have seen some kind of a top. And I'm going to put that together. I know you didn't ask this, but I'm going to put this together with gold, because if gold suddenly pulls back again, yields start to rally, and the dollar starts to strengthen into early next week. I think that we're looking at something that says, whoa, be careful. the market is going to become a lot more volatile, meaning there could be deeper pullbacks. Am I answering some of your question?
Yes, yes. And short term, what do you see like short term support on the 30-year, like short term, like?
The short-term chart I'm looking at right now, I would just say to you, 143 and a quarter to 142 and a half is absolutely key to hold. If it breaks under that in the short term, it says, whoa, be careful. This can shake up the market a little bit because yields will want to be climbing rather than declining.
Right, yeah. Yeah, because I know the Fed, they're doing, they're increasing rates, but they're also doing quantitative tightening, which is also like an artificial rate hike.
Yeah, so there are a couple of things going on as well with the Fed. There was talk over the weekend. I can't remember where I saw it. It was a really good article, something I actually I never think about it too deeply in those terms. And that was the number, in other words, the sales. And if they cut the sales, I think it was like from 60 to 30 or 50 to 25, that's going to make a big difference, because now you're talking about a shortage of bonds to sell. It's going to change by a certain factor, as if they were changing the yields. It has the report was saying there's a chance that it could have the same effect but done in a different way. I'm not sure. I don't understand it fully, but I understand the concept. I'm just saying, I'm looking at price. If the yields go above if the 30-year T-bond continuous contract trading at 144 and 7/30 seconds starts to trade next week anywhere in the 145 and a quarter area or higher, it says those yields are definitely coming down, and they're going to be coming down for a little while. And if we turn down the other way, the yields go up because the bond itself is going down, then there's the other story that I was talking about.
Okay, great, Basil. Basil, one last thing. By any chance, can you look at the U.S. ruble pair and see if you think the ruble is going higher or lower from that chart?
The ruble?
Yeah, look at the U.S. ruble pair, the USD to ruble, Russian ruble.
Do you know the symbol? If you give me the symbol, I can do it. USD to what?
I think it's USD. Hold on. Let me see right now. Hold on. Let me see. Where is it?
I've never looked at the USD ruble, ever.
Oh, yeah. It's USD RUB.
Oh, RUB, a rub. Okay, USD rub.
Yeah,
well, now maybe it's a rub in USD. Let me just see if I can put it the other way around. I don't know if I get it. No, I don't get that. I don't get the ruble. No.
Okay.
Sorry.
And the dollar, is it looking strong or topping?
So the dollar, I think, I would not be surprised at all to see the dollar start pulling back, because it's had a fantastic run. It's how much it pulls back. It can go all the way to 94. So, but at this point, it's holding pretty well. We'll see this afternoon. Thanks for calling, John.
Thank you.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're looking at the E-mini 2-minute chart. This is the H. This is the March contract. It's made a peak E, and this has gone sideways, and they've got a leg D in the 10-minute, actually a peak D now in the 10-minute. Remember, D and E, that's where we start to get a little cautious. It can even go higher. Look, there's an F, just a fractional higher, high. That's called a rogue wave because everything was turning down. If you were short, you were correct because it only went above there for a fraction. That's exactly what happens with a rogue wave. It's as if the high tide is at noon at 12:06. You get that one wave that didn't see the sign, but the tide has already turned down. Look what happened afterwards. It just went whoosh to the downside. So this is what I'm looking at. I got a couple of things that I have to talk about, but I first want to say, within the context of what happens normally with the Fed, there was a period at one time where the day before the Fed announcement, the market got a little shaky, and then that morning started to rally. And then when the Fed came out at 2 to 2:30 with its announcement, the market actually continued soaring higher. That was completely the opposite of what had happened for years, where the market anticipated incorrectly the move and then pull back very sharply. So that always said to me, ooh, there's a period now where the market anticipates correctly. Don't think the market's always wrong, because sometimes the market can absolutely be right. So what we've had now is a good few days of rallying and then fading, but rallying and then fading and making a low that has not been taken out yet. And that says to me, three things you got to watch for. If at 235, 240, after the initial move and the shaking and the rattling and the rolling, the Dow, now let me go here. I'm going to talk about the VIX. I'm going to talk about the Dow. So let me just go to the Dow for the moment, because that's what I always focus on the most, even though I look at every one of the other indices. The Dow, if in fact either has a sudden little dip and then it starts, I don't care how it happens, but at 235, we're at 23,968 right now, up 292. If at 3 o'clock, instead of giving back and now only being up 120 to maybe plus 80 in the Dow, there's almost a double that you've gone now to the, just like within seconds, just this short covering and, oh, geez, whatever it takes. And of course, we don't mind the upside because we have long positions, only long positions here. If that does work out, then what you want to see is the Dow start to get to the 24,150-ish level. It's like 200 points up from here, holding it, and on every pullback, it goes to a higher high, and if the close it closes high. Then you just do not want tomorrow to hear talk about a government shutdown or whatever it is, anything negative that impacts the market. You don't want this beep, beep, roadrunner thing where, watch out below. Because if that happens and you close at the high today and overnight, through whatever reason, there's a minus 35-point S&P pullback, you don't want to be tomorrow on the other end of the stick if you've only just been buying. If you're long and you've been long for a couple of days, you have a cushion. I would use that cushion, and I'd really have patience. If you get stopped out, you get stopped out. And certainly don't make a profit into a loss. But what's really important is that even if you close at the high of the day, if you're getting a little nervous, take enough off to make yourself comfortable and still remain long. And if we gap down tomorrow and you've had a really nice run from now or 3 o'clock into the close, that's your cushion. You can give it back. You don't want tomorrow to close at the low of the day after a triple-digit down day, and then Friday to have even worse news, because that's going to be that's just going to shake things up terribly. So just be prepared. And at this point, I don't think there's a single person yet that can say with 100% surety that they know exactly what the prices of the Dow will be at 3:30 to 4 o'clock. You can guess, but there's no ruler, there's no measurement, there's no handbook that says, oh, when the Fed does this at 3:30 in the afternoon on a particular day when bonds are this and gold is that and dollars this, that the Fed is going to instigate a move in the Dow that says it'll be up 523 points at 3:45 in the afternoon. It's just, you don't know that. So be prepared. If you're long, good. If you have not done anything yet, that's really tough, because you've got a gap up now. But let's just do a little bit of searching now to say, what if you haven't got in? What would you do? Fortunately, we have got in positions, and we have enough of a cushion to say, if we give it back, some of it back, not a big deal. There's going to be plenty of opportunity. But the VIX index trading at 2364, down 7.5%, down 1.96. That's going to be the clue. Because if at 10 minutes to 4 o'clock, if this market is just, I know people have spoken about 1,000 or 2,000 point rally. I just want to go step by step. I mean, let's face it, there's another shoe that could drop. Just be careful. Now, let's just say that at 3:45, the VIX is at 2363 today, and it's so far it's already hit 2597. No. Is that right? Did I put those in? 2594 was the high on the 6th. 2594 was the high on the 10th. 2614. Oh, I forgot to type it in. That's why. 2614 was the high yesterday. By every measure, the VIX is getting a little bit overbought by every measure, but it could stay high because this is a nervous market. Here we go. If the VIX at 3:45 this afternoon is trading below 22.80 or lower, 22.76 or lower, that's really positive, and we should have a really great close. And there's a chance that if there's no bad news, we should have a really good Thursday morning open. If, in fact, I don't care what the reason is, if we take out 2614, the high of yesterday, because it's just bad news, that's just not a good sign at all. All right, those are the numbers to look at. So Dow up 200 points above where we are now, so it's up nearly 500 points at 3:45, and the VIX is falling sharply. Really nice action. Now, what if gold says, only one raise, and then we're going to be flat maybe? What if gold is not going to move up because rates go much higher? Because look, gold itself at this point is in a leg E. The GLD right now is in a leg, where did that go? GLD, come on. There we go. This is this is Gillette. Oh, nice little bounce there. GLD, GLD is in leg C. Oh, this is interesting. It's only a leg C in the daily chart. And that means that GDX, which is the gold miners. Ooh, this is going to be really interesting. GDX right now, GDX is in leg D. Made a high today of 2147, trading at 2077 right now. And it's in that up channel. It hit the up channel resistance exactly. Oh man, this is, what a day this is going to be. We're going to see so many fascinating things here. If gold itself at 3:45 this afternoon is trading above the intraday high today of 1260, what was that, 12?
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, you got Steve coming up, you got Dave coming up, you got Tom O'Brien. So I'm just doing my automated resistance and support levels. 120.84 is the weekly resistance in the TLT, 119.77. And a lot of resistance levels. So if the TLT spirals this afternoon, that's going to be very interesting. Crude oil. I wanted to talk about crude oil. I was running out of time, but I'm doing it real quickly. Crude oil is, yep, there it is. So look at this pattern now. I discussed this earlier in the week, and then I discussed it yesterday. Nope, let's go right here. Crude oil at this particular point is trading up 144. What I'd said is there's a Chapman wave, inverted Chapman wave stalk leg formation, and that there should now be a pullback underneath 49.41. Then there should be, that's the neck, and then the beak, this is upside down, remember, there should be a rally that takes it above 49.41, and as soon as that happens, you can expect that you're getting close to some kind of reversion again to the downside, because this is the exact opposite of what we look at in the Chapman wave stalk formation. So yes, there should be a rally. We'll discuss tomorrow where the resistance is, maybe somewhere between 50.20 and 51.20. If it goes higher, we'll have to discuss it. If it goes above that peak A minus right there, that's going to be something else. The crude oil, I'm expecting a bit of a bounce. So usually before the Fed, you get the market going kind of flattish, waiting, or it gives back a chunk of the rally, and then it just sits there waiting, and then boom, it just goes. But sometimes 1 minute before the Fed announcement is where you actually start to see the move. I wonder who gets that information first. But whatever happens, I'm looking at it this way, that keep your stops in place if there's a sudden slide. Everything about it says that we are due for some kind of a bounce. There's just no reason why we shouldn't get, I'm treating it as a bounce, and then the reality sets in, and then later on, we'll start to do testing of the lows. This bounce could be quite big. I would like to see it big. 24,186 is the 9-period exponential moving average resistance on the Dow. We're at 23,955 right now, and then 24,380. What happens after that's going to be key. Have a wonderful day, and for subscribers, you know that we've got our positions. We'll be looking at the XLF, we'll be looking at the financials, we'll be looking at a lot of things at the end of the day. I didn't want to do any extra trading. We're good. We'll see what happens. Just let things stand. And have a wonderful day. Stay tuned for Steve, Dave, and Tom. I'll be back tomorrow. Check out my opening call.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.